Welcome to Get Rich, the podcast that helps you do just that. Get rich and stay rich. Hey, I'm Molly Benjamin. I'm the founder of Ladies Finance Club, one of Australia's largest financial education platforms for women. But before I started helping thousands of women take control with their money, I was a hot financial mess when it came to my own finances. And not the fun kind of hot, more like crying in a supermarket wondering where all my money went kind of hot. But here's the thing, if I can go from financial mess to owning a share portfolio, investing in property and building wealth, then you can too. My mission is simple, to make women rich. Because when we have financial freedom, we have choices, confidence, and control over our future. Every week on Get Rich, I sit down with some of the best experts in the industry to break down how we can all start investing, growing our money, and creating long-term financial security without the jargon, boring bits, or overwhelm. Because when women get rich, we don't just change our lives, we change the world. So if you're ready to start making some smart money moves, hit that subscribe button and let's get rich together.
Most people see insurance as boring, optional, or something they'll get to later. It's always on the bottom of the admin to-do list. But the truth is, insurance is one of those very few things that completely change the trajectory of your life, not when things are going well, but when they aren't. So in this episode of Get Rich, I am joined by Trish Gregory, who is an insurance advisor, to break down what insurances do we actually need, the most common mistakes people make without even realizing, and the real life moments where having the right cover makes all the difference. Now, I know we have been going on insurance a lot lately at Ladies Finance Club, but it is so important to understand, like, what cover do you have? What cover do you need? So in this episode, we're going to be talking about the real difference between life, total permanent disability insurance, trauma, and income protection insurance. Why so many women are dangerously underinsured even when they earn good money. The real life moments where insurance becomes genuinely life-changing, and how to get insured properly before it's too late. Now, if you want to connect with Trish, I've popped her details in the show notes, but this is one of those life admin tasks, unfortunately, you can't afford literally to keep putting off. So let's jump into today's episode. Excited to have you on and talk insurance.
Woohoo! The most exciting subject. Thank you for having me, Molly. I'm very excited to be here.
It is a very important topic. I know some people go, oh God, insurance, skip. But literally is like, it's that riddle of like, it's the thing you want but never want to use. But if you do have to use it, you want to make sure you 100% have got it.
Exactly. That's right. Much like all insurances in our life, we hope we never have to use it, except for like health insurance with our massages. Always love that one.
God, I love that. I guess kicking off, why is it important that we have our insurances sorted?
Oh, very good question to kick off. And it's because we don't know what's going to happen in life. That's simply it. And for anyone who is reliant on their income in order to continue to live and pay their bills and eat food and pay their rent or their mortgage, it's essential. Because until you hit the point that you are able to finance your life without doing actual work, like say from your investments or a trust fund or something like that, until you hit that point, you are reliant on your income, and therefore you need to make sure that income is secured for yourself. And we do find that as women, we tend to undervalue how much our income is needed, especially if we're in heteronormative relationships where maybe we're not the higher income earner. But if you look at everything you do in your life, you may find that you actually do a lot that you would have to pay someone to do if you were unable to do the things that you do. Like, for example, myself, I have kids. Molly, you've got one on the way, which is very exciting. So you'll get to figure out just how much actual work that you don't get paid for, you actually do, let alone actually getting the job you're getting paid for.
Oh my gosh, absolutely. And I guess, can you just share a couple of stories of any of your clients where they've actually needed to claim on their insurance and how much of a life-changing decision that was for them to get that insurance?
Yeah, exactly. I can talk about two, and then I also want to talk about my own personal experience, if that's okay. So last year, I helped a lady with a mental health claim. Now, she was completely burnt out from work. She was not okay. They were trying to performance manage her out, actually, and she ended up going on a mental health claim. She was on that claim for about 6 months, which meant that she was continuing to get income coming in while she was just dealing with recovering from this burnout and this chaos. The good thing is, because she had that time, she knew she didn't have that pressure. She was therefore able to focus just on recovery. And after 6 months, she was able to find a lovely job and go back onto that job. And in the meantime, her income kept coming in. One of the big things for her is that when she found a new job, I said to her, now it's okay if you go back into that new job. She wanted to go back full time. It's okay if you end up very shortly after, or, within 6 months feeling like, oh God, I'm overwhelmed again. Life is not okay. You can talk to me and we'll just go back on the claim. That's okay. That's not the end of the world. So it gave her comfort to jump into that new role as well, because then she knew that she had that fallback.
Yeah.
So that was lovely. I have another lady who I actually used to catch the bus to school with many, many, many years ago. And so we're the same age, in our sort of early 40s. And a couple of years ago, she actually came to our business and said, hey, I think I need insurance. I'm in the public service, but I might not have enough. Can we sort it out? We helped her with all of her insurances. And then 2 years later, she ended up having stage 4 bowel cancer that was found in the emergency room due to some symptoms. Now, fortunately, she has income protection. She got payment for her trauma insurance, $250,000. And one really key thing with her coverage, so income protection is regularly coming in. She has small children. She has a mortgage. Her partner's still working. So all of that is covered, which is wonderful. But when she was going through the process of figuring out which medication was best for her, the immunotherapy that she was looking at for her bowel cancer treatment had just been put on the PBS a couple of months beforehand. And that was going to be the best one for her treatment. Thankfully, it was on the PBS, which is great. But if it had been delayed by a year or 2 years or something, it was going to cost her about $150,000 for 2 years. And that would have been the best treatment for her. So luckily, it was on the PBS. But those are some of the realities of why do we have insurance.
Oh, I'm sorry. And you're going to share about your own story.
Yeah, and with my own story, so my partner was actually in the military, so a little bit different with the insurance, but still insurance. He was injured and unable to work, and that has enabled him to be the stay-at-home parent by having sort of the military income protection type thing, which has meant that I've been able to pursue my career in financial advice. He's definitely been working, but he's been off paid work, just been on an income protection claim for 10 years, which has enabled him to look after our small children. It meant that we were able to buy a house. It meant that we were able to move back to Canberra to be with family and also have our third child. And it also enabled him to study and start a new job, which should be happening very, very soon, next month, as a lawyer. So he's been able to take that time to really get better in all the ways that you need to get better, not just physically, but also emotionally, family-wise. So he's now feeling really confident rather than stressed about starting this new career.
Yeah. And that's just like life-changing, having that protection versus not having it. For sure. So what I was keen to do is, you touched on a couple on, like we've talked about income protection, trauma. Let's go through, because there's kind of 4 main insurance types when it comes to our life insurance. So life insurance, which sometimes gets called death insurance. So that one is a lump sum if you get paid out if you pass away.
Correct. That's right. So, it can get paid out in 2 sort of ways. So life insurance, beautifully rebranded from death insurance. Life insurance is the whole of the insurances. So life, total and permanent disability, income and trauma. It's the bulk, and it's also that individual insurance. Most people don't claim on it because most people don't die. And so you get to a point where you either retire and you don't need insurances, or you're financially independent and then you cancel it because you're like, I don't need to keep paying for this.
Yeah.
But for the people who do claim, there's sort of 2. About 50% of people claim because someone has passed away, and that money is just a lump sum payment that's used for the people who are left behind. And then the other 50% of people who claim actually claim because they are terminally ill and have less than 12 months to live. So they can use that money to pay off the mortgage to support the family, and also we like to include some money for the just go and have fun in your last months or year together. So very simple. It's a lump sum. You get it. You can do whatever you want with it.
All right, so that's life insurance. What comes next?
Next is your total and permanent disability. And these two are often linked. So when you look at your superannuation statement or your insurance statement, most people will see that they are the same amount. So you might have 250,000 of life and 250,000 of total and permanent disability. This is again a lump sum payment. So you get the money and you can use it however you want. Most people tend to use it to pay off the mortgage, because if you're totally and permanently disabled, it means that 2 doctors have signed off that you are never working again for any job for which you have education, training and experience. And insurers are a little bit different depending on the definition, but broadly that's the case. So you're not working again. Now it could be an invisible illness or injury, or it could be a very visible illness or injury. So it's not just I'm a paraplegic, therefore I get the money. It could be a huge variety. So people use that generally to pay off the mortgage, to cover expenses that from a medical perspective, and then also often cover the difference of their income between what their income protection will provide and what they might actually need. Of course, after the mortgage is paid off, you might find that you have a lot more money available to cover yourself.
Okay, so that's total and permanent disability, which is
Correct.
TPD. What comes after that one?
Then if we stay within the lump sum payments, then there's trauma, which we mentioned previously. Now, total and permanent disability and life can be paid through super. Trauma has to be paid outside of your super from your cash flow, because there's rules around superannuation and it does not meet any of those rules. What that one is used for is the main claims are cancer, stroke and heart attack. And the idea being that you're using that money to pay for medical expenses. And yes, we have a great medical system. We have Medicare, we have private health, we have the NDIS. But as I mentioned before, sometimes there are the best medicines for you and they are not on the PBS and they can get quite expensive. Or there's other therapies that you want to do or doctors that you want to see and they cost a whole bunch. That's a lump sum and that comes to you. Again, you can do whatever you want with it. We tend to do a calculation on what's most important for you. So yeah, that's trauma insurance, nice and simple. There's no tax paid on trauma. There is potentially tax paid on total and permanent disability. And from a life insurance perspective, it depends on who the money's going to as to whether there's tax or no tax.
Awesome. And then our final one is income protection insurance.
Yes, income protection. Most claimed on, because it can be for a short period of time or it can be for a long period of time, like those 2 stories I talked about before. Income protection is a little bit more complex. So it can cover up to 70% of your salary. If you're receiving the money, it's 70% of your salary, then that money is taxed like a regular income. So let's say you're on $100,000, you can be insured for $70,000, but you don't actually get cash in hand, $70,000. It's like you're paid, your salary is $70,000 and then tax comes out. You can include superannuation. You can keep superannuation out of it. You have waiting periods and you have benefit periods. So how long do you have to wait before the income will start coming through from the insurer and for you still be to unwell? The longer you wait, the less of a cost, but also the longer you're waiting. So it's all very individual as to how much money you have, how much debt you have, how many savings, what your partner's income is, all those sorts of things. Then the benefit period is how long the money will be paid for. And so the most common are a 2-year benefit, a 5-year benefit, or all the way through to age 65. Now, the good thing is that most people who end up on an income protection claim don't go more than 2 years of needing the payments. Like the large majority of people, I think it's 93% or so, or 83% of people actually finish their claim within 2 years. So if you look at that, statistically, you'd say, well, I only need a 2-year income protection policy. The challenge is if you end up like my partner and it ends up being 10 years, or you end up like my stepmother and you can never work again, you'll be really glad you had that money coming through all the way through till age 65.
And what are the most common things you see people claim on when it comes to income protection? Is it mental health?
Mental health is about 40% of the claims. Okay. And they tend to be, those shorter claims. Then it tends to be your back or neck, knees, depending on your job. The second most common And then cancers and strokes would be the third most common.
So you mentioned before, so we can have life insurance, income protection, and permanent disability in our super.
Correct.
In your experience of talking to women and men all the time about insurances, how often do people have insurances in their super and they don't even realize? And of that, is it enough?
Yes. People often do, although the rules changed a couple of years ago, which meant that people may have had their insurances cancelled. But generally speaking, people probably have some insurance in their superannuation unless they've opted out. And usually they will have a couple of $100,000 of life and total and permanent disability. And they'll have an income protection policy, which might have a 60-day waiting period or a 90-day waiting period, and it'll go for 2 years. Now, is it enough? Well, you have to think about what it costs to live these days. So if you're totally and permanently disabled and you're never working again, is $250,000 enough to pay off your debt? Probably not for the majority of people. Is it enough to pay for medical? Is it enough to make sure that you're okay for the rest of your life? Probably not. And with income protection, if it's default insurance, it may cover your full salary based on the first superannuation guarantee payment that got put in, or you may have got the right amount. Sometimes I see people with $1,000 a month of income protection, and that is woefully inadequate for where they're at. So what I find most people do is either they'll say, oh, I do have insurance in my super, I didn't even realize, or they'll say, yeah, I have enough insurance in my super. And then I'll go and look at it and say, oh no, we've talked about what would happen if the worst things happen, and this will not get you there.
Yeah.
So what we tend to do is have a look at what people have a look at their medical situation and see whether we should add insurance on, replace, or, mix and match.
Yeah. Awesome. And I guess around mistakes you see, particularly women make with their insurances, I hear quite often is, but I don't earn that much. Am I even worth insuring? And I'll be like, how much are you earning? They're like, $75,000 a year. And I'm like, well, number one, that's a great salary. But if you've got 20 years left of working, that's $1.5 million. Like that's worth it. Definitely protecting. I guess, what are other mistakes you see people make when it comes to their insurances?
A big scary one that I see people make is when you're in usually a heteronormative relationship, and the male will be the higher income earner and the female will be earning, like you say, like a good income, but not maybe 200,000 or 500,000 or whatever the male is. And what they will say is, well, if I couldn't work, it's okay because he'll support me because his income covers our lifestyle. And what I often see is the women who have then divorced and then they've got kids and their ex is being an a-hole, and they suddenly realize that it is all on them. If they cannot work, there's no money. Yeah. It's going to be a hard slog. And what I find is, because the women will say, well, I'm going to cancel my insurances because we've got him insured, and therefore if he can't work, I'll be fine. Once they come to me and we try and get some insurances in place, usually they've had kids, they've had a couple of medical things happen, and they start getting exclusions or loadings, which means that you won't be able to claim on certain things. Like most people post 2020 have a mental health exclusion, for example, which means you can never claim on that. So that is such a common mistake. And the other one I see, and I had a client at the end of last year with this, she went and tried to get her own insurance. The insurer said to her, oh, we can see you had some mental health issues recently, so we're going to put a 75% loading on your income protection, which means that she would pay 75% more. So frustrating, but from my perspective, amazing, fantastic. You're still going to be covered and we can review that in a year, right? But she didn't know that. She did it herself. Then she came to me a year later and she said, Trish, in that year, I have been diagnosed with this, and this. What can I get? And that is then a really tricky conversation where she's tried to do the right thing for herself. She's balked at one little hurdle that I could have explained away and said, this is still in your best interest, and helped her figure that out. And then life happened to her. And now I'm getting her a hodgepodge of insurances, but it's not exactly what she would like, but it's the best we can do. And I see that happen quite a bit because the most common mistake people make is they think about their insurances when something happens to them. And the ideal scenario for everyone listening is go and get your insurances now, especially if you are well, because you're locking in that good health. And then if anything happens to you along the way, and I can tell you, as a lady in her 40s, stuff just definitely happens that just like nothing claimable yet, but it would be an exclusion if I went for insurance now. So if you can lock it in early, you're avoiding that mistake that I see so many people make, that I then have to put a lot of pieces in place instead of just making it easy and going, here's your insurance.
Yeah. And insurance is one of those things that just has to go on the life admin task list, and you've got to do it. So I guess the process for people who are like, well, what is the process? Yeah, can I just go online, Google a few, or do I need to sit down with an insurance broker like yourself and actually like figure out what do I need? I guess, what are your thoughts on that? And then let's chat through actually what is the process and the process we went through, because you're my insurance broker.
Yes, exactly. So the first thing is there's a couple of different ways to do it. So you can go direct to the insurers. Not all insurers allow that, but a bunch do. The challenge for that is it's kind of like going to your bank to get a mortgage or going to a bank to get a mortgage, right? They're going to tell you their thing. You don't know what the rest of the market is doing. So you can absolutely do that if you'd like. The second thing you can do is go to an insurance broker, which is not someone who gives personal financial advice, but has a chat with you, explains the concepts, and then helps you to understand things and lets you pick. So you don't know the nuances of all the insurers. You don't know that this insurer is going to be best for you because you're pregnant and you're going to have a baby, and therefore where this insurer is helpful if these risks happen. Or you don't know if that insurer is going to be best because they won't give you a cervical cancer exclusion and this insurer will. But that is also a possibility. And then you can go for personal financial advice, but like myself, where the advisor asks you personal questions. They talk about your medical history. They take you through how much insurance is enough and the pros and the cons. And then they help you apply for the insurance and manage that entire process for you. And it was lovely to take you through the process, Molly, of getting your insurance done. So you have a bird's eye view of it, of exactly how it works. Did you want me to go through the steps of how we did it? Or?
Yeah, I think it's helpful because the initial one was we had 3 meetings in total. The first one was where we kind of did a bit of, was it that the fact-finding one?
Correct, yes. Yeah, fact-finding. So in the first meeting, we had already sent you out some quick questionnaires for some basic information to help me prepare for the meeting. And we went through and we checked what's your information, make sure it's all correct, how much insurance is enough, and asked you a bunch of questions about your life, and it's really personalized. And then talked about any medical situations because, like I said, some insurers are better than others on certain medical, and obviously choose the insurer that's best for you. For us, that meeting is complimentary. Then the second meeting that we go through is options, because nobody ever knows how much insurance they want and how it compares to what the cost is. Like, I'm sure all of us would love to have $10 million of life insurance and total and permanent disability and $1 million of trauma so that we can make sure that everything absolutely is covered. And if we die or something happens, we are good. But there's a cost component to that. And it can be different between couples on how much you want to insure depending on your assets. And so we will show you, for example, if you say need $2 million of life and total and permanent disability to cover all of your everything, all of your needs, we would show you $2 million. And then I might say, well, if we don't want to cover medical expenses, for example, we might take out $400,000 and show you what 1.6 would cost like, and then show you what maybe 1.3 or 1 million would cost like, so that you can feel like you're really informed on the costs versus the benefit. How did you find that, Molly, with which insurance amounts should we choose?
Yeah. Well, I like to have the options because I had a certain budget in mind that I wanted to spend. And so for some of them, I was like, I don't feel like I need all that, but it'd be great to have this amount and that fits in my budget nicely. And then it was great as well where you could say, okay, well, that can come from your super and that will pay outside of super. Just because I think what stops people as well is the cost. It's going to cost so much. But I was actually surprised with how reasonable it was.
Yeah, absolutely. It can be quite reasonable. It all depends on you, your personal circumstances, your medical situation, and how much you're insuring for. And I do find that sometimes when people who are quite cost conscious, but they know they need insurance, will put more into superannuation so that you know you've got insurance, you know it's affecting your superannuation a little bit, but it's kind of when you earn more money or you get a bit older or the kids are a bit older, you can switch things around so that you can still be covered.
So just to recap on those meetings, the first one is you sit down, we do a fact find. The second one is you show the options, we go through what we want. And then the third one is actually going ahead.
That's right. So the third one is the statement of advice. And so every financial advisor needs to give you a statement of advice that tells you exactly what they're recommending, the final costs, the risks, the benefits, making sure they've got all your details correct. And then we apply with you. And I find that a lot of clients, I've done insurance applications a number of different ways throughout my career. And I think this is the best way, where we take you through it. We share the screen, you're answering the questions, because it's terrifying as someone who's applying for insurance to think, I'm going to say the wrong thing. Should I be saying this? Is it lying, or is it not something to worry about? Whereas I can help people understand that process. And because one of the biggest problems with insurance, and all insurers acknowledge this, is over disclosure.
Yeah.
So if I might say, oh yeah, my calves were a little sore today, to the insurer over the phone, that then might trigger to them, they have to go down this rabbit hole of, well, why are your calves sore? Have you gone to the doctor? Have you seen a physio? Blah, 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 blah. And they then have to know things. Whereas if you say to me, my calves are sore when I woke up this morning, and I'm like, did you go for a run yesterday? Like, what was going on? And I'm like, yeah, that doesn't count. You haven't gone to the doctor. You haven't gone to the physio. That's just life being in your 30s or your 40s. It means it's much more precise. And then after that, we wait for the insurer's outcome. There can be outcomes as quick as instant. I've had some instant outcomes for people who don't really have any medical issues, all the way through to a couple of months if there's quite complex medical things and the insurer might need reports and the doctor might be delayed. But generally it might be a couple of weeks to find out what the insurer has said, to find out if your insurance is going through with no issues, or if you're having exclusions or loadings or a decline. Those are really the options.
Awesome. I remember I was on a podcast. It was for our UK podcast a few years ago, and we had a woman in who'd had to claim on her income protection insurance, and she was a single mum of two. She had twins, and she just went for a routine checkup, found she had breast cancer, needed to start treatment immediately. And she said, I made 2 phone calls. I made the first phone call to my brother, and then I made the second call to my insurance broker. And the insurance broker said, you are covered. Your lifestyle doesn't need to change as far as like what you're spending, what your expenses. And she's like my life would be completely different if I didn't have that.
Yeah.
She's like, I would have taken my kids out of school, like because they were in private school. She's like, I would have had to move into like social housing. Like it just changed her life completely. And again, like I've had friends who have been, received cancer diagnosis that they never thought they would ever receive. And because they didn't have income protection, it meant they had to rely on family and friends. And we don't want any woman to be in that position. So ladies, please, if anything, this year, 2026, get on top of your insurances. And Trish, where can people find you?
Oh, they can find me on LinkedIn. I'm very big on LinkedIn, Trish Gregory. They can find me on TikTok, which is Chicken Finance 5. I've recently got Quail, so it's Quail Talk instead of Chicken Talk, but I talk about insurance, finance, and then show my quail a lot. And then also they can email me, trish@hcis.com.au, or they can go to the website, hcis.com.au. If they're like, all right, I'm going to get this done, we can book you in and get your insurance sorted. Just let us know you've come from Ladies Finance Club and we'll look after you.
I love that. And sorry, did you say you have a quail?
I have 5 quail.
Okay.
And
I was like, did I mishear that?
And my incubator is hopefully coming tomorrow. because I have 4 girls and a boy, and I'm really hoping that I can hatch some baby quail. So everyone should follow me on LinkedIn, because those baby quail will definitely be on LinkedIn and on TikTok if that's the case.
There you go. When you get your insurance sorted, you can check in and see how the quails are going.
Exactly, that's right.
And we'll pop all those links in the show notes. Thank you so much, Trish.
No worries. Have a great one, Molly.